All right, what is up, my peeps? Joshua Smith here with another GSD Mode podcast weekly real estate tip. And today I'm here to talk to you about the importance and why it's absolutely crucial to make sure that you have multiple different sources of business. And by this, I mean multiple different lead generation strategies along with multiple different types of business. The reality is, you guys, shifts happen, and shifts can take place because the market is shifting. So who the market is good for, who's buying, who's selling can go out there and shift. And then there's other types of disruptions and shifts that may take place, whether it be through technology, whether it be through pandemics like we experienced during COVID. We don't know what these shifts are always going to be. And through my 18 years or almost 18 years now of doing this, I've experienced a lot of disruptions. I've experienced a lot of shifts. So this is one of the best ways to go out there and hedge our overall business, to have a hedge against, these changing times and changes and disruptions that can take place to ensure that we are successful no matter what. So first, I'm going to just run through some different examples and different past experience that have either happened to me or those that I personally know in the industry, just to shed some light as to why this is so important. All right, so let's look at first-time buyers. Let's just say you put all your eggs in one basket. You were going after first-time buyers like you were a savage at going out there getting first-time buyers, helping first-time buyers, and so forth. And part of my business, one of my legs of my business, because remember, I'm going to have multiple different ideal clients that we're serving at any given time, and we're going to have multiple different lead generation strategies to go out there and gain those ideal clients through any given time. And I'll go deeper into that as we advance here in the podcast. But when we're looking, let's just say 2016, 17, 18, 19, first time buyers made up a percentage of our business. Well, then all of a sudden we had that, post-COVID craziness that took place, after the initial shutdowns, when the market just skyrocketed here in my market in Phoenix, Arizona. I don't know how everybody experienced this, but here in Phoenix, Arizona, we were one of the fastest appreciating markets over the last couple of years. We had about 30% year-over-year appreciation for 2020 and 2021. Well, then the same geographical locations, the same real estate, the same neighborhoods, the same subdivisions, same properties, same everything, all of a sudden, first-time buyers really became obsolete in 2020, 2021. Not saying that they were, completely obsolete, but the amount of business that we were doing first-time buyers dramatically changed. I mean, it was very difficult to go out there and help them and serve them because the property that they were able to get, let's just say 2018, 2019 even, for maybe $300,000 or $250,000 is now $500,000, is now, whatever. I mean, prices just skyrocketed. So, it went to the point where one of our legs of our business was focusing on first-time buyers. Now, those same properties that first-time buyers were able to buy a couple years ago are now, upper middle class, the affluent, institutional investors, and so forth. All right, so if you're, let's just say as an example, so in that case, if you were just all first-time buyers, you had no other business, you were just all your eggs in one basket on first-time buyers, that could have created a big disruption. But we were hedged because first-time buyers was one of our legs of business. We also had multiple different ideal clients. All right, so then we just saw with Blackstone via HPA, Home Partners of America, which is one of Blackstone's funds, if you will, to go out there and acquire business. They just pulled out of 36 markets. So Blackstone is a big part of our business. And when I say a big part of our business, it's one of our legs. So when we're doing 60 some closings average on a monthly basis as a team, Blackstone through Home Partners of America might be 10 to 15 of those. So we've kind of diversified our own business, if you will, to be able to hedge against these things. Now Blackstone is still buying here in Phoenix. We're one of the markets that they kept. But again, like we're planning on, okay, they restricted their buy box, they restricted the purchase and acquisition that they're doing in our market and other markets. That was kind of phase one. Phase number two is now they've pulled out of these 36 other metropolitan markets that they were buying in, and they have a select few that's left. I don't know. I think I don't know what the amount is. Maybe it's a dozen left that they're purchasing, and I don't know what that is left. Phoenix happens to be one of those, but we're already prepping for it. It's like, okay, we're gonna continue going down that vehicle as it exists. But again, it's not 100% of our business. It's not 80%. It's not, and so forth. And there's a good chance, as this economic recession and this real estate recession advances, that they quit buying in all of these markets. Well, again, I need to make sure to hedge my business. So that's another example. All right, so and I saw this really happen in the great financial crisis. So we're looking about 2008 through about 2012. I saw a lot of agents and teams and so forth that were so hardcore on REOs. So your foreclosure properties, REO stands for real estate owned. I know we haven't heard that term in a lot of years, or a lot of realtors that weren't around during that time haven't heard of that term. So it stands for real estate owned. So it's bank-owned foreclosure properties. In 2000, during the great financial crisis in markets like mine, man, there was a big percentage of business that was foreclosures, REOs, and so forth. Well, I saw some agents and team leaders that got absolutely crushed when that business stopped. That was their only focus, their only leg of the business, and so forth. And then boom, they got absolutely crushed. Luckily, we were, diversified, and we were focused on doing a lot of REOs. We were doing a lot of short sales. We were also working with traditional, buyers and sellers. Even though REOs and short sales made up the majority of our business at the time, we were still working with investors, and so forth. So we had that hedge. But then even within REO itself, so within bank-owned foreclosures, one of my biggest banks that I was a listing agent for during that time was Fannie Mae. And at the peak of having that Fannie Mae direct account, there was months where we'd get 80, 90 new assignments, so 80, 90 new listings from this one institution, on a monthly basis. Well, then all of a sudden I come in the office one day and it's, hey, look, we decided to go out there and equally spread out our assets. So instead of just, loading up, a select few agents or teams in the market, we're going to go out there and kind of spread these out over more agents. And I'm sure that they, had their reasons behind that. But we're going to now keep everybody at a 30 cap. So we're talking, a bank that we might, and again, when I say 90 assignments in a month, that was like the best month. But let's just say I'm used to getting, 30 or 40 on a monthly consistent basis from this one bank, one asset management firm, however you want to state that. Well, then now I'm at a 30 cap. So that doesn't mean 30 new a month. That means total 30 from the pipeline. So through that one account, man, that massively had a negative impact on the amount of business that we were doing with that one account. But again, we were hedged. We had short sales going on. We had traditional business going on. We had investors going on, and then even within that REO or foreclosure niche, got to the point where we had 35 different institutions that we were representing through banks and asset management firms, and so forth that we were representing. Fannie was our biggest, but we still had that hedge. I'm not going to sit there and say that this stuff doesn't hurt. That wasn't something that was fun. It definitely hurt. It definitely hindered my business. We had a dip in business because of it that we had to make up, but it didn't kill me. It didn't crush us. It didn't allow us to still be profitable through those times, allowed us still to do well, still to expand, still to grow, with that hedge. All right, so hedge funds. So this was at the bottom of the market during the great financial crisis when it hit the bottom. Well, then another leg of my business started going where the opportunity was at right then and there. And again, I'm still doing REO, still doing foreclosure, still doing some traditional business, still doing some other investment business, and so forth. But then we started to see these big hedge funds coming in, kind of similar to what we saw in 2020, 2021, but buying up as many properties they possibly could that met their buy box. Because they're getting these properties at 50 cents on the dollar. This was the very bottom of the market. They're coming in and getting homes, at $85,000 that now today would sell for $350,000. Well then, one of the bigger institutions, Invitation Homes that we were representing, they just pulled out, dude. And it wasn't even okay, we're going to slow buying. It was just like, hey, we're stopping, cancel all the deals, like we're just done. Well, and then they're gone. So if I would have allowed myself to just scale up my business and focus on just that one hedge fund, and I get why we would want to do that, right? It was this big opportunity. They're buying like 500 and some properties here on a monthly basis, here in the Valley. At least that was their target goal. Not that I was doing that many units with them, spread out over a lot of different agents, but there's a ton of opportunity there. However, if I would have been chips all in on that one source of business, then that would have had I would have had to rebuild. Right. So again, this is the whole purpose of this is to go out there and hedge. So those are different examples of ideal clients and the shifts that take place. But then again, it isn't always because of a shift of market. Like right now, we're seeing Blackstone and a lot of these other institutional investors either pulling out completely of buying properties or minimizing their buy box right now because the real estate market is starting to shift. Right. But then there are other times that these disruptions take place because of for whatever reason that may not be due to a real estate market shift. Here's an example. Back in the day, this was a long time ago, but I used to be very deep into paying buying Zillow leads. got to the point where, well, this was between Zillow and Trulia, but they're owned by the same platform. But Zillow was our biggest, doing about 16 grand a month in Zillow ads. Now this was a long time ago. So back then though, they used to charge per click. So my lead cost was very low. It's very lucrative. I was getting a great ROI on it. So my average lead cost at that time was like $17. Well, then they made the decision internally that they were going to no longer charge based by click. They were going to charge based by impression. So then overnight, it shot my cost of lead, up by from like $17 to over 45, and then it just kept climbing from there. And again, that created some pain within that lead source, but I had hedges of other types of business that I was doing and other sorts of mediums of business and so forth, so that didn't break me. All right, so I was just talking with a good buddy of mine that operates a large team, and they're recruiting a lot of agents, and their main recruiting play was through Indeed. Well, Indeed is changing the way that you can go out there and run ads for recruiting agents, and because you can't actually stipulate what you can pay them, and it's a 100% commission position, and so forth. They started blocking those ads, now suppressing those ads, and so forth. Now, temporarily he's got that fixed and figured that out, but until he got that figured out and fixed, boom, that it went from getting, having like 5 agent recruiting meetings on a weekly basis to all of a sudden just like 0. And it may have been not quite 0, but I mean, it just got blocked overnight, and the conversations there are, well, man, have other plays, right? Like who knows? Like you may have temporarily been able to fix this with Indeed, or maybe Indeed does change their ways and allow you to continue doing that, or whatever that looks like. Who knows what that looks like in the future? We can't control that. But either way, have other plays. So other, meaning like other recruiting strategies for recruiting other agents outside of just that one source, because we never know if and when these things are going to shut down. So many of these things are beyond our control, and so forth. It's like, dude, if all my business is from YouTube, and then all of a sudden, I don't know, like YouTube decides to, cancel me. I mean, we've seen over the last couple of years how many people have we seen get canceled from YouTube, and so forth. Like who knows what that looks like, right? So we don't know whatever that looks like. Maybe that goes away and YouTube's no longer the big thing and Rumble takes over, and so forth. All right, so then let's look at the COVID lockdowns. So if my business was, well, now we were in a state that was essential. I know this wasn't the case for everybody, but here in Arizona we were essential, but there were still the lockdowns taking place. So that may, like if my business was reliant on, let's just say, all networking groups, like in-person networking, or maybe just open houses, and now I'm whether it's temporarily or how long. I mean, some areas were shut down for a year, 2, like that was a long, based on where you live geographically, that all of a sudden, if all my business was tied up in that one medium, and then boom, now I'm wiped out. And I got to go out there and reinvent myself completely. And I'm not saying that we can't go out there and reinvent ourselves. And a lot of us had to go out there and do that. And I know, you might have had to do that and so forth, and you can pivot and shift and be that kind of chameleon that adapts and moves, and all that's great. However, if you plan and prepare before that, well, then you can have these other plays already in place. Because it's like at any given time, I talked about different types of business. It's like at any given, it's like, dude, they're all buying and selling. Even right now, there's still Oreos and foreclosures taking place. There are still, well, maybe not right now during the moratorium, but there's still short sales taking place. There's still, maybe that was a bad example, but, up until the Oreo moratorium. So even when the market was really strong, in this bull market that we've seen really since 2012, meaning this massively appreciating market, on all fronts, there were still short sales. There were still REOs. There was less of them than there was during the great financial crisis, but they were still taking place. So it's like, okay, I got my investor clients, I got my traditional business over here, and on my traditional business, I might be focusing on first-time buyers. Maybe I have upsizers. They're looking to buy and sell. Maybe you're going after expireds, and then again you have some investment makeup. Then you also are versed in short sales. You're well-rounded. Because at any given time, one of those is going to be stronger than the other. But then it just pivots and shifts. Over time. All right, so another example that isn't, a pandemic example that isn't, due to, a technology or a company or a platform, making changes that hinder us. A good buddy of mine, and I'm not going to name drop him because I don't know if he wants this, public or not, but a good buddy of mine was just this massive cold caller, dude, and like a savage at it. Got to the point where he was doing like 60 grand, 50, $60,000, commission months just from like he was just, awesome, amazing on the phone, just a savage at it. He loves, the phones, loves cold calling, and so forth. Well, after doing that and putting all the stresses on his vocal cords, he all of a sudden became a health issue. He all of a sudden had all this vocal cord damage, got to the point where like his doctor was like, dude, you got to stop talking. Like he had to go through a phase where he couldn't even speak. Like he had to whiteboard things out for his family, because he had so much vocal cord damage taking place. Like we don't know what these things are going to be. Now, luckily, he was able to successfully pivot into YouTube and other online sources and so forth, so he didn't have to sit there pounding the phones 5, 6, 7, 8 hours every single day to go out there and make that money, but there was some building time, and, all this business is $50,000, $60,000 of monthly revenue from this one play. Boom, now this is suppressed, now this is gone. Well, now I got to build this other thing up. And he's crushing it and even doing more business now, but that was, a big lesson for him, through that. So you never know what's going to happen. We never know what's going to happen with our health. We never know what's going to happen, with the economy. We never know what's going to happen with the overall real estate market. We never know what's going to happen, on a technology front, and so forth. So these are just great ways to go out there and hedge your business by having multiple different ways that you generate your business, along with multiple different types of business that you serve. And another way of putting that is ideal client. So here is what I recommend. So in any given market, I recommend to identify where the current opportunities are at. So, and this is really, really important. This is because like a lot of people are freaking out right now because the market is starting to shift and so forth. Look, you guys, the reality is real estate's always selling, always has, always will. There's going to be somebody always crushing it in your market, always has, always will. It's going to be up to you in your decision if you want to continue. It's kind of not funny. It just is the reality of it. But when markets are strong, meaning these are massive appreciating markets, like 2005 and then 2020, 2021, all these agents just surge this industry, jump in the industry. Well, as soon as the market starts to shift, well, it's no longer this, hardcore seller's market, and it starts to shift into a neutral market or a buyer's market. All these agents are dropping off like flies. And I don't understand it. It doesn't make any sense to me. Because no matter what, historically, whether it's been in a severe buyer's market, whether it's been a regular buyer's market, a neutral market, a seller's market, severe seller's market, whether it's been a boom, bust, crash, anything in between, real estate is still selling. Our product is real estate that we sell, or maybe your team leader, broker owner that's out of production, you're still in the real estate business, right? Like you're just facilitating an environment for your agents to have massive success at selling the real estate. So it's all the same shit. But it's always moving, it's always selling, always has, always will. The only thing that differentiates is who is buying it, who is selling it. And then based on that, and along with the times, how you go out there and get your messaging in front of who is buying and selling. That's the only thing that changes. Right? So always asking yourself, where is the current biggest opportunity and or opportunities at right now with where my market is at right now, with where we are at right now, the time that we are in, like where are those opportunities at? Who is buying? Who is selling? What are the geographical locations within my market that they're buying and selling? What are the type of products that people are buying and people are selling? Why are they buying? Why are they selling? Where are they coming from? That shows you then, okay, any given market, who I'm going to target. And again, that can shift and change. Like I said, in 2020, 2021, for the first-time buyers that we were targeting, prior to that, well, no longer were they able to go out there and buy. Like there was no 250, 300, 350. Like they got to a point where there's nothing under $500,000 in the geographical locations that we work. So first-time buyers. Not to say that there weren't still some out there, but it wasn't enough percentage of them to make sense for us to go after that. So we started looking at, okay, well, it's upper middle class, the affluent, and institutional investors. That's who's buying, and who's well, I shouldn't say that. I mean, that's who is buying at least. Right? And then selling is a slightly different story, but we're starting to break that down and then figure out, the effective ways to go after those. So who's buying, who's selling? Look, again, just where are the current opportunities at? Who's buying, who's selling right now in our given market, and go out there and identify not just one ideal client for who's buying and who's selling, but identify at least two. Because we always want to have at least two different target markets that we are going after, within our given real estate market and what's taking place. Now, that being said, there's nothing wrong with going out there and okay, I got these two different ideal clients. Right now though, like you may not have the capacity, the bandwidth, may not make sense to go after both simultaneously. Okay, let me go after one first, get this one dialed in, but as soon as I got this one dialed in, it's rock and roll, it's kicking ass, let me add that secondary, so then at least I have two ideal clients. Because again, if I'm representing traditional buyers, and I'm representing investors, and so forth, one's always going to be stronger than the other in any given market, and so forth. Then from there, per ideal client, so this is again who the market is good for, per ideal client, I recommend then that you get at least two different lead generation strategies per ideal client. Right, so then from there, you're not just reliant on one play. Now you got multiple plays. So this might be, hey, I'm doing paid Facebook ads, but then I'm also doing open houses, right? In the geographic locations that you're working, just as an example. And those are two big plays that we go after with that. And again, there's nothing wrong with, okay, let me get this lead generation strategy dialed in. As soon as this is dialed in, I'm going to then add the secondary. I'm not saying you got to do this all at once, but this is just a plan to go out there and build this up so you're hedging yourself. So in any given market, at any given time in your business, boom, you've got this built up where you've got at least two different ideal clients, two different buyer types that you're going after that you're able to serve. So like another way to say is two different niches, right? Then from there, you got two different lead strategies per niche. In a perfect world for me, what I'm always focused on is I want to have two offline strategies and two online strategies per niche that we are focused on, because again, that shit changes, man. I've just seen so many damn changes. Something's hot and something, we'll ride that wave while it's hot, but then all of a sudden, like, it's not hot anymore. It stops, it shifts, it pivots, and this way, it's just allowed us to hedge. When this thing, this thing is cranking over here, but this thing's still working good, but this thing's cranking up here, we might be leaning on this thing that's cranking a little bit higher. We might be putting a little bit more gasoline on this thing, but then all of a sudden, when this thing starts to burn out, well, then boom, we scale this thing back up, and this thing burns out completely. Well, then we're looking to add that another secondary to that thing. So again, and this is just my personal philosophy, how I've operated my real estate business over the last almost 18 years now, and it's allowed me to become one of the top realtors and team leaders on the planet and the top 1% of producers out there, and go out there. And last year we did about $5 million in gross volume sales, or sorry, not gross volume sales, in gross commissions, about $200 million in gross volume sales, and it's worked very, very well for me and allowed me to go out there and create this success. I'm always looking at hedges. People talk about this in the stock market, whatever. It's like, well, how do you protect yourself? The common thing in the stock market, which I don't personally play in that world, but people are told to diversify. Well, if you're, if this one business is over here that just gets murdered, gets crushed, but you're diversified, you're spread out over multiple things. And I'm not trying to give advice. I'm just saying that this is just an area a theory out there that a lot of people operate by when it comes to their investments, to go out there and diversify, because at any given time, one of them might be getting crushed and one might be doing really well. So you're not putting all your eggs in one basket, So I'm putting all my eggs in one basket, meaning I'm all in on this real estate thing. I don't have any other plans. I'm all in on this business. I'm like that, so, because you'll hear certain things from like Warren Buffett of talking about the importance of putting all your eggs in one basket. But Warren Buffett, maybe his eggs are all in one basket with Berkshire Hathaway, but Berkshire Hathaway is invested in a lot of different companies. So it's like, okay, I'm all eggs in one basket within this real estate career that I've committed to, that I'm going to go out there and succeed no matter what in any given market. But then with that being said, I hedge my lead generation strategy type of business that I'm going after, and regardless. And this, again, I've talked about this earlier, but this applies to agent recruiting, because it's all the same shit. This is one of the biggest things that makes me laugh about team leaders and broker owners. Is one of the biggest Achilles heels that I see with them is they think that all of a sudden the situation is different because now they're a team leader or broker. It's all the same, dude. You're either recruiting buyers, you're recruiting sellers, you're recruiting agents, or you're recruiting your leadership team that is doing those things for you. All is the same. It's that same process. So this applies to anything and everything out there. All right, so just an ending note here before we wrap up. The markets may start shifting faster than they have previously. And when I say that from an economic standpoint, but then also, and they may or may not from an economic standpoint, who knows? There's so many shifts going on, and I don't have time to go into that in this video, but there's so many shifts that we've never experienced before in our life, behind, from deglobalization to, this shrinking demography issue that we're going amongst, to, reindustrializing and remanufacturing here in North America. I mean, there's so many things going on We went through globalization. We've never went through deglobalization. So who knows how this is going to impact our economies? So we might see more severities and downturns and up booms, busts, and all that stuff. Who knows? But we're going to experience at any given time. There's always cycles, right? But then from there, when we look at the expansion in the overall exponential growth of technology, right? Those technologies can create disruptions, because it's not just where the opportunities are at, but it's also how that business is done, in that given time, how we're going out there and targeting. It's not going to be too long, you guys, before we're sitting here, doing videos and talking about how to go out there and run banner ads while people are in the metaverse, with their freaking Oculus goggles on and figuring out how to show up there. It won't be too long, in the future before we're having to figure out how to do, virtual tours through Oculus goggles where we're probably showing properties and people aren't even actually physically stepping foot in that property and trying to go out there and adapt to those things. So because of the, technology advancements that we're experiencing, that's going to shift the way that we do business as well. So it's always paying attention to this stuff. So looking at and focusing on where the opportunities are at right now, but then also paying attention to what changes are taking place and where is the market headed. I'm paying attention to this very, very closely. And when I say this, like 99% of my time is focused on the opportunities right now. Then 1% of my time, which is more than enough time, so the hour, and I might have like 1 day a week of total time that I'm focused on, okay, like what are the trends? What are we seeing? Where's the market heading? What is this showing us? And so forth, where most of my time, though, is focused on bringing, those money-making, producing activities that are bringing in revenue now today, but I'm still able to go out there and pay attention to what's going on in the market. Like I'm watching and tracking, so I know in our market, hey, if these shifts and changes continue at this pace, well, at this point is when we should start seeing, based on historical, just historical data that we have, this is the point where we should, start to see short sales starting to take place again in our market on a larger scale. This is at the point where we're starting to see more defaults and foreclosures taking place. I'm paying attention. I've got that mapped out, and we're watching all that stuff closely. So we know where the opportunities are at right now, but we also have an idea of where we are heading so we can prep and plan from there accordingly. All right, guys, I hope that you found this helpful. Keep up the amazing work. Keep kicking ass. Thank you for all your support, and I will see you next time. Peace.